So this is kind of special. This is our first time actually having, well, not having multiple guests at the same time, but having multiple guests from different organizations be on the podcast. So welcome Liam and Chris to the Decentralized Opportunity podcast. I'm really excited to dive into both of your journeys. One from the founder side, seeking funding, and then the other from the VC side, who actually builds the fund that funds companies. So, I guess Chris, why don't we start with you? Tell us a bit about your journey.
Yeah, happy to. And first off, thank you for having me, and excited to share the story and hopefully pass on some learned lessons that other founders can take. But my name's Chris Callen. I'm founder and CEO of a startup called Plot, based in Wichita, Kansas. My story really starts at birth. I was born into a construction family, been around it my entire life. As a kid, in high school, I was involuntarily told to go work on job sites and sweep the shop and things like that. So I kind of rebelled away from that and got into software and that career choice. And then eventually came back and took over the family company and ran it for about 4 years. So it was something that's always been around, the kind of the intersection of construction and technology. And I founded my first startup back in 2017. And, the way I like to describe it in a single sentence is we built a really great piece of technology that was just a horrific product. It was really cool. It did exactly what we built it to do, but it did not meet a market need and this, that, and the other. So I obviously took that very hard and learned a lot of lessons the hard way, and worked for another startup in the interim and then founded Plot in 21. So it's been about a 3-year journey, coming up on our 3rd anniversary. And obviously I'm very excited to be able to use some of those lessons that I learned the first go around. So, Plot in general is a job site coordination tool for general contractors and trade contractors to manage the procurement of materials and the delivery of those materials to the job site. So any building you've ever stepped foot in, every little piece of matter in that building came there on a truck. And that is a incredibly large logistical orchestration when you're talking about hundreds of suppliers, dozens of contractors, all trying to get things in place as quickly as possible to turn it over for someone to get work done. But excited to share the story about how we interacted with Casey Rise, but I'll hold off on that. And thanks again for having me.
So Liam, your turn. Introduce yourself.
Yeah, thanks Wyatt, and thanks Tanner for having me here. Liam Reilly, I'm a principal at Casey Rise Fund, which is a seed stage venture fund based in Kansas City that invests in companies with ties to Kansas City. So been in this space for 2.5 years, and I'm a relative newcomer to the startup area, but someplace I always wanted to be. In undergrad, I launched a small business, didn't really make a lot of money, but decided to go to law school because I thought that's a way you can work with entrepreneurs and startups. And then after practicing law for a handful of years, had the opportunity to jump to the investing side. And it really feels like where I was meant to be, and just love being here. Love working with founders like Chris and other folks that have big dreams, working on innovative projects and ideas, and helping them reach the goals that they aim for.
So Liam, how is it that a fund actually gets assembled? That, the money gets put together and it gets doled out to entrepreneurs, like how you actually find them as well? Like, how's that process whole work?
Yeah, great question. So most VC funds are structured in what's called a limited partnership. So there's a general partner, which is the investor or the organization that manages the investing, and then a bunch of limited partners, which are the investors. And what the general partner has to do is typically go out and find funds from these LPs, a bunch of either high net worth individuals, corporations, foundations, and convince them of their thesis relative to investing in the startup space. So Kansas City or Casey Rise Fund has a Kansas City focused geographic thesis. Other funds have very thematic or stage specific thesis, and it's all relative to what they view as their competitive advantage and how they capture that. So they go out, they collect a bunch of money from folks and then invest that in what's called a blind pool. So the LPs, while may have some kind of influence and can certainly get the attention of the GPs, don't necessarily dictate the day-to-day operations, and that's left to the professional investors associated with the general partner or the organization that's overseeing it. So that's kind of generally what a venture fund is. In some cases, it can be a single investor of extreme wealth, But a lot of times the people that you meet on the VC side are professional investors that are managing money for other folks and are driven by a focus on returns or a focus on impact, depending on however they strike that deal with their limited investors. And then kind of if we work across the spectrum, they take other people's money, and then they're at this very central focus point that they go out and find companies or startups that fit their thesis and are at their stage and have open rounds that can meet their allocation requirements as well. And a lot of times it's really a network-driven game. There's a bunch of different areas you can find startups kind of coalescing generally, but a lot of opportunities will come through the network, through other VCs, through LPs or investors in the fund, through other founders. And it's just taking each of those opportunities and considering them when the time comes.
Can you dive in a bit deeper on that thesis part when it comes to a fund, like how it's determined? And
yeah, so it really is dependent at the end of the day on the various funds. So funds can be run by former operators that have a deep network with talent, business partners, potential acquirers in a certain space, and they decide that that's a space that's big enough that they can pursue and get a sufficient number of investments in. To kind of take it back to KC Rise Fund and give a really tangible example, KC Rise Fund was launched out of a civic initiative that realized, or that was determining, I think, how Kansas City could keep pace with some of its peer cities post-Great Financial Crisis. So part of that was identifying an opportunity for strategic capital in the early stages of companies from pre-seed, seed, Series A. And from there, finding someone who was willing to run the fund. And that ended up being our founding partner, Darcy Howe, who was fresh into retirement after a long, successful career in private wealth management for Merrill Lynch, and decided that she wanted to go launch a venture fund focused on Kansas City in the process. So the whole idea is that there's opportunity in underinvested populations, one being Kansas City in particular, and tapping into some of the organic strengths and tossing in the rocket fuel that is venture capital investment and seeing what would happen. And that was 48 portfolio companies ago, $100 million assets and management ago, and now 3 funds ago.
Liam, I'm going to have the same question for you in a minute, but real quick, I want to switch to Chris because I'm starting to understand and see, honestly, get a little excited for this conversation because we have a really cool intersection here. We have Liam, you went to law school and we're like, nah, that's not for me. I'm going to go into venture capital and run this fund and do all these cool things and help entrepreneurs. And then Chris, your story lines up really well. You know, my dad was in construction. I was always at the site. I learned how to do it. Decided I wanted to start a business. Did it work? But I learned a lot. And then I created, Plot and still in the construction business, but in your own entrepreneurship kind of way. And Liam, the reason I said that I'm going to ask you the same question here shortly is, Chris, what was it like starting a business, especially a business surrounded around tech in Wichita, Kansas? And I ask this question because Tanner and I are both from Nebraska. Whether Kansas and Nebraskans want to admit it, we're neighbors. Sometimes we have a little bit of rivalry, but the one thing that I consistently see is no one thinks of Kansas or Nebraska as a place for tech startups. So Chris, why Wichita, Kansas?
Yeah, no, we definitely have a stigma about us, and parts have some validity and most don't. But it is, Wichita's home for us. It's where we're raising our son and our soon to be here daughter, and being close to family is a big part of that for us. But to me, when you're talking about building a piece of software that is intended to go out and work with the blue collar workforce, it's intended to be not built for programmers, not built for, fintech or anything like that. You have as good of an exposure to your customer base or your potential users. And that's an extreme value add. So I think that a lot of the culture that surrounds Midwestern values can be put to use very effectively in a technology company, just as they do in any other sort of company. And obviously, that wasn't always the case. I do think that it was a maturation of decades to catch up with coastal cities and major urban areas. But I mean, in this day and age, even the urban teams are geographically spread. That competitive advantage still exists for those urban centers, but it is largely diluted. And there are so many secondary ways to get the same value out of the creative destruction that was so prevalent in those tech hubs that you can take advantage of those wherever you might be. So it's really about finding the right people. And as a startup, you're not looking for 50, you're not looking for 500, you're looking for a team of 5. And these cities, be them in Midwestern, lower population, lower amount of individuals choosing a career in technology, there's enough people here to build these startups. And you're starting to see that those companies are now third and fourth generation of a company that's exploded and broken down and exploded and broken down. And we're no longer the trailblazers in that regard. And it's to those companies that have come before us that we owe them making that a little easier for us.
Fantastic answer. So now on the inverse for that, Liam, we already mentioned law school, decided to go into the seed funding and helping out with those funds. You're in Kansas City, and I'm not positive how far Wichita and Kansas City are, but it's not far. Why did you think, you know what, I'm going to jump in on these seed funds and start working this stuff in Kansas City versus Silicon Valley, New York, Chicago, places that, you commonly see these, or at least hear more about venture capital and that sort of environment?
Yeah, absolutely. I think first, very similar to Chris, it's a personal thing. I'm from Kansas City. I left to go to law school, and then I came back and practiced. And the ability to take an opportunity where I get to work with neighbors and community members and help them achieve their dreams is just amazing, and not a chance you get all the time. So personally, it's just I'm investing in my hometown and the people I knew, and it's great. But I think kind of more on a strategic discussion level, those coastal cities and traditional tech hubs, nothing against them, but they don't have a monopoly on good ideas or good businesses. And there's been a lot of great businesses that have been built in Wichita, that have been built in Kansas City, that have been built in Nebraska. So our idea, is kind of twofold. The first of which, or I guess the second of which we couldn't have seen with the COVID pandemic, but it's become a reality. And I'll start with the first, though, is just those markets where you kind of traditionally think of tech and startup hubs had gotten a little oversaturated in terms of companies and investors, and that left a great opportunity for folks in areas that weren't being considered by the traditional kind of investing group or groups. And there was kind of this rise in technology, and it started with the proliferation of software tools that made it so easy to start a business. And we're seeing that again with Gen AI. So it's never been easier to start a business. You don't require the same manual work or staff that you do before. So you can turn an idea into an MVP and see if you can get revenue relatively easily. And then after that, take on strategic capital to grow and scale if that's what you decide. So there wasn't a monopoly on ideas. It's never been easier to start a business. And I think to Chris's point too, proximity to those coastal areas is no longer seen as like a necessary requirement for a solid business or to get the funding that you need. Really, it's just the access to the networks that come with that funding. So networks to other VCs, to partners, to customers, to talent, et cetera, and the resources as well. And all those networks are repeatable and easy to recreate, and something that we're trying to do at KC Rise Fund through the work that we do every day.
So Chris, this question is for you to kind of keep things flowing in the same way. Liam mentioned earlier that VC money is a bit like rocket fuel. And so it can definitely accelerate you and take you to the stars. But if it's put into the wrong vessel, like a car, it'll just blow it up. So how did you go about in deciding when to take money, when to take venture capital, and how much to raise? And then what are you also looking for in a partner in terms of a VC? Because money is not all built equally, in the sense where Liam has been touching on the networking, the community aspect of that partnership is a huge part. So when did you decide that it was time to start finding a partner to invest in Plot? And what do you look for in a partner?
Yeah, I like the fuel metaphor. I always like to say, it'll add fuel and you can go faster, but that doesn't mean you're going the right direction. Mm-hmm. So you'll go wherever you spend the money in, and it's really easy to spend the money. It's much more difficult to turn that into an ROI that takes your company to the next level. Because in our world, and in my world, a venture-backed company, we started out as a venture studio-backed company that was a pre-seed with a strategic partner in Koch Industries based here in Wichita, Kansas, which I swear, it was a complete coincidence that the founder was in Wichita and Koch Industries in Wichita, because I was talking to a guy in Indianapolis who was talking to a guy in Europe who connected us with someone that was in Atlanta. And then like I've met with someone in Wichita like twice. So I swear that's a coincidence. But I don't think I convinced anyone of that. But, you know, it's the venture capital, it's my biggest asset that I have as a startup founder is time and market. And you can say that again as saying the lean startup methodology. How do I spend as much time and market? How do I survive long enough to grow to the next level of maturation of a company to raise that next tranche of money? So from day one, we always knew it wasn't like should we go and try to go for profitability? Should we go out and take debt? Should we go out and try to finance our way as a services companies might, as my family company, you know, grew slowly over time in that vein? That was never in the cards for us. It was, we need to become a company. We need to raise funds that is obviously in the form of venture capital. And before that money runs out, we need to be a much different company and do that wash and rinse cycle again. So it's always been in our journey, but I think that a lot of founders look at the time base. They look at, you know, how long does this money need to last us? And they look on the calendar. The calendar doesn't care about your revenue. It doesn't care about your customer. It doesn't care about your burn. It's a date and time. And so when we look at funds, it's always about how can we, when we bring in partners, you're bringing in people that are going to be connected to you longer than the average American marriage. They are going to be connected to you for a long period of time and making decisions on behalf of your livelihood. And getting into that partnership is something that should not be taken lightly, because everyone wants to raise money. They want to figure out, hey, how do I get that next check in the door? Well, after that check is in the door, you now have a board member. Now you have, at minimum, you have someone looking over your shoulder and really starting to call out and poke holes in your plans. That's their job. Their job is to do that before the market does it for you. So I think when I come about how do I choose partners, it's all about who can add value above cash. You know, back in 21, when VCs were throwing money at anything, it really was, how do I find something that's above and beyond the cash components or strategic values or a network value, which sounds so rudimentary in their names, but it is what can this person do that, you know, these other groups can't. And, you know, in particular with Casey Rise, I met Darcy back with my previous company when I was doing Techstars in Kansas City. And I've been around Casey Rise, and it's one of those things where, even though they didn't invest in my first company, they were always there. They were just always there to be a sounding board, to always give me the red team review. They were always, I would go to them, I would pitch to them, and they'd say, Chris, we're still not going to invest, and we're going to tell you why. A lot of VCs, they'll say like, oh, it's not, it's market timing, yada, yada, yada. It's like, no, it's all BS. And the investors that I want on the table are the ones that would come back to me and tell me why. So when this came around, you know, Casey Rise was at the top of my list. And I wanted a partner on our cap table that would be able to give us real detailed feedback on what needs adjusting, how do we gain more partners like them, and how we should use this money in the most effective way.
Liam, can you kind of caveat off of what Chris was just saying? Because I think a misnomer for a lot of people, unless they're deep into startup culture and understanding how venture capital works, venture capital is not just about giving you a check. Can you help elaborate? And Chris, that was you went right where my next question was going. Well said. But Liam, can you elaborate more on what does this partnership mean besides just having some money to, you know, build your product or market or whatever that situation is? What else do they provide?
Yeah, no, great question, and dovetails well with what Chris said. I think the thing that's important to remember at the end of the day, kind of given the structure of VC funds, VC investors are stewards of other people's capital. And so as such, they're trying to seek returns, and they're not just looking to make passive investments like you might otherwise see in the public markets or elsewhere. So that comes with a couple of things. We want to help our investment grow. So when we make an investment in Plot and in Chris, we're not putting that money there and saying, good luck. We're saying, here's our money. What can we do to help you get to where you want to go? Because that benefits us, that benefits you and your goals, that benefits the company and everyone associated with it. So it comes down to kind of the shared alignment of mission and vision and just knowing where we're trying to go and end up. And with that, we try to roll up our sleeves and do as much as we can. Also appreciating that at the end of the day, it's the founder's company and it's their decisions on how to run it. And we can get in the way at times. So it's important to be helpful without getting in the way and ask the questions to make Chris think deeply, but also not distract him from what he's trying to do on a day-to-day basis. And then also at the same time is when things are going great and that's happening, we're there, we're helpful, we're doing what we can. But then also if things are a little bit of a struggle or Chris needs help or another founder needs help, we're also there in those opportunities because we don't want to see an investment go to zero and there was something we could have done along the way to help out. So it's just helping, being there, being active, engaged capital at all stages whenever we can. And really, I mean, it's not just the investment, it's also the kind of the personal touch as well, helping Chris with whatever we can to help him be a good founder and CEO to benefit the company as well. So not just purely how can we make Plot succeed, but how can we make founders like Chris or management teams like Chris also succeed and be better.
So Liam, what is it that you look for in a founder or a team that makes you go, yeah, these guys get it. I want to bring them on board. I want to invest in this company. And then what are some of the common red flags, misnomers that people think like, oh, if I come up to this person, I'm going to show off this way. And it completely misses the mark.
Yeah, great question. So I think what's important to keep in mind at the stage we invest in, seed stage, or what we define as roughly $30,000 a month in revenue, depending on the company and the industry and the customers and size of contracts, is it's still technically pre-product market fit. They probably have an MVP and some good kind of customer signals, but not a lot of data to go off of pre-product market fit. And we like to say we're looking for founder market fit or some competitive advantage with the founding team. That can take a couple of different forms. I think like Chris's background's a great example of someone who's a domain expert, who's spent time in the space, who can talk the talk, who knows the folks that are operating there, and just has a general awareness of the problem they're trying to tackle and how that affects the customers they're trying to sell to. I would say outside of domain expertise, another big one is just kind of someone, and Chris, I apologize for the pun and reference to your previous company, but someone with grit and kind of determination or perseverance to push through. Chris can attest to this more than I can. I was never a founder, but there's tough times in those early days. Like pre-seed is especially tough. Seed is not much easier, but just this willingness to push through. So some kind of personal reason to succeed, almost in addition to like the financial upside of it all. So sometimes we see folks with lived experiences in the space that they just have this burning desire to do something about it, and they're not going to quit until it's done. And that's huge because the days are long, the hours are short. I don't know, whatever the cliches are, but it's just a lot of hard work, and you have to put in a lot of extra time and make sacrifices, and you just want to be able to see those early determination or characteristics in folks when you're looking at an opportunity. But those are probably the two big ones for us. I think in terms of red flags, like nothing in particular other than be a nice person. Like obviously, like we don't want to invest in people that are mean or difficult to work with. But I think it's not really a red flag. I think something to bear in mind just based off in conversations we've had with folks. And this goes back to an earlier point I made. At the end of the day, it's kind of aligning incentives and goals and missions is when you approach a VC, just make sure that you understand kind of what the implicit expectation is on kind of both sides of that conversation. And Chris somewhat alluded to this earlier, or it's I guess the rocket fuel analogy is not every successful company needs to be given rocket fuel, right? And there's some really great companies that are being built today that are on not as aggressive growth trajectories, and they're going to be good outcomes for the founder and all the investors, but they may take 10 plus years to come to fruition, and that just doesn't fit the traditional venture model. So I think one of the bigger red flags when we're talking with folks is less around like what characteristics they have and more about are they understanding what the purpose and goal of venture funding is, especially from the perspective of the investor, and how what they're explaining and their long-term vision and strategy that they're laying out aligns or doesn't align with that. And there's no right or wrong answer. It's just venture funding isn't for everyone, and if you haven't had a kind of deeper consideration on that and you get misaligned, it's a pretty quick sign that maybe it's not a venture investable type of opportunity.
So if I can, I want to shift direction a little bit from venture in general to the Midwest and those startup ecosystems that we're seeing here, whether it's Kansas City, Nebraska, the Midwest is what everyone thinks. So my first question is to you, Chris. You talked about why you're in Wichita and the value that brings to you. But I also want to hear, what are some of the disadvantages of trying to build a tech startup, venture backed or not, in the Midwest, in Kansas, or in those specific regions?
There certainly are disadvantages. I think just the whole idea of, you use the word startup, and you use that in certain news publications, certain articles, that it's picked up a certain way. It's most likely a venture-backed tech company. And you see the, publications that are here local, and they use the word startup, and they're talking about, a shop down the street that's a service company or something like that. And it's not that that's our word. That's not what I'm trying to get at. It's just that we kind of gloss it all together with general entrepreneurship. And I think that startup is kind of underneath that umbrella. But when you're looking at a venture backed, for one, and then a SaaS company, and then for us, a B2B SaaS company, those are the definitions that kind of make the skill set we look for in founders, investors, and employees very, very difficult to find, because there's not a lot of those here. And also, I think it lends to the early days of a startup. Most of these startups that, my previous company did this. Most of the other companies in our area do this. They get their first checks. They finance the first paychecks for the founding team with angel investors. And angel investors are abundant in all across the nation. But what they typically do is they invest in what they know. They invest in how they made their money. And until recently, we haven't had angel investors set up deploying capital that made their money building B2B SaaS startups. And so what we really see is we see people looking at a startup deal like they would an oil deal or a real estate deal, or there's obviously a lot of machine shops and aircraft manufacturing, high degree manufacturing here in Wichita, and none of those business models are anything close to a B2B SaaS technology company. So it took a lot of educating angel investors. And to Liam's point about it's just not being a good fit with the founder, there's a lot of not good fits with angel investors. And so we're seeing that when we're looking at an angel group, or we're talking to angel investors individually, you have to really make sure that you're on the same page about what this is compared to what the angel investor is expecting. And that's probably the biggest delta I've seen from the money that's being deployed on single digit or double digit days of a startup's journey on the coasts in New York and Boston and Chicago, is they're getting investment from individuals that have been there, done that, and they have that experience. And I don't see that happening locally, but I do see, as we get our first exits in the Kansas City area, the Omaha, Nebraska area, that money is being turned around and redeployed from individuals that have been there, done that. I think that is the biggest weakness of the region, and at the same breath, that is the thing accelerating the quickest right now towards a more positive outcome.
Now, Liam, same question. What are some of the challenges you see in the startup ecosystem in the Midwest or more rural areas?
Yeah, I mean, just to kind of piggyback off of Chris's and add some other points to it, I think it's just a lack of familiarity, of not enough reps in kind of the startup world. I think startup world gets romanticized about. It's fun, it's great, but it really is its own distinctive kind of beast in a lot of different ways. And not only are angel investors aware of kind of what they're getting into or the spaces or the company and how it's growing, but we also need to, in Kansas City or the broader Midwest, build and sustain a critical mass of employees that have experience in this space, advisors that have experience in this space, independent board members that have an experience in the space, because each of those are kind of part of the continuum associated with growing a solid startup, and you need each one along the way and at different points. And if you're left looking elsewhere, then you kind of lose that comparative advantage of being in the Midwest and away from the coast. And now you're competing in the backyards of the big companies that we said that were different in more nimble than. So I think to Chris's point too is as we see this, it's a cliche, but it's a good term, this flywheel turnover, we're going to see more employees with experience in the space, more investors that have made wealth off these opportunities, and then more advisors who spend time with these founders and now understand how to help coach folks with a more kind of through a more nuanced lens just based off of experience. You're seeing this with companies in Kansas City after Backlot Cars, and then in Omaha, Huddle and Company Cam are some other good examples. So just more experience, more familiarity, and I think to even put a finer example of it, and this is one of my favorite analogies that one of our founders uses, but he explains there's like phases of startup life. It's jungle, dirt road, highway. You start in the beginning, it's a jungle, you're just trying to fight your way through. Dirt road, you're just trying to move forward, and highway, you are cruising at full speed. And I think when you go from the Midwest where they have more traditional legacy industries and folks are used to the highway because there's all these people and processes in place to keep it going, to then just get thrown into the jungle and not know what to do. If you're an employee, if you're an investor, if you're an advisor, you're going to be struggling a bit to get through that. But the more times you do it, the more reps you have, the more comfortable you'll feel in the jungle. You'll be on the dirt road before you know it. You get to the highway soon enough and everyone will be cruising.
Love that analogy. Thank you.
So being though there's a lot of distance between our communities here in the Midwest, how do you go about actually like finding peers? So Chris, I guess I'll start with you. How do you go about finding people going on the same journey with you that you can bounce ideas off, get some direction, make sure you're sane from time to time, especially when you're hitting those roadblocks and just feeling like you're bashing your head against the keyboard? How are you finding those people here in the Midwest?
Yeah, we refer to it as founder therapy. No one understands a founder's pain like another founder. It's unique. It's a unique role for sure. So, there's lots of ways to get connected. I think that, a lot of the organizations, they do a good work of getting founders together. I know Casey Rise puts on, monthly sessions where they bring in a speaker, both for their portfolio companies, but also open it up to those that are looking to, get a company and get a company funded. There's a number of different organizations out there just putting together events, but you just have to show up. You just have to show up and show up too early. Like before you have a company, before you have a product, before you have a co-founder, getting out and into the world is where you make those, creative intersections with individuals that, might be able to form something. But startup weeks are great. Startup weekends are great. Those are where like-minded people are coming together. And we don't have to be bound by the physical world anymore. And so, there's Slack channels out there with all across the world in some cases where, I'll have conversations with founders that are inside of my sector, outside of my sector. And just because they may not be selling to the same customer, building the same type of product, doesn't mean they don't have valuable insight into something that they can provide. So it's always useful. Back to Liam, the analogy you talked about, I do like to call out though that I think the best mentor for someone in the jungle is not someone who's cruising the highway for the last 5 years. It's someone that's just got to the dirt road. So I always call it a mentorship or a relational ladder. You always want to try to be around someone that's just a rung or two ahead of you, because they're close enough to you to really realize or remember the ups and downs, and their founder story hasn't been polished for 5 years and talked, and you get all the warm, fluffy Disney version of the story. You get the real quality, value add, empathetic, gritty details of what can be there. And then also our nature as software companies, everything changes in 5 years. Like if you do not have AI as a core competency of your product in 2 years, you're dead. Like that's just a reality for us. And the same thing was true 5 years, 10 years ago with cloud and this, that, and the other. So it's always about finding someone that's been there recently to have that core connection to you, but can also give you some real advice, not just the stuff that makes the headlines, because it's really easy to tell a cool story. It's not usually that valuable for a founder until you can show them real experience.
Yeah, I've been reading a book recently. I've actually read quite a few by written by CEOs who have stepped down from their jobs, and so they now have free time and decide they're going to write their big business novel. And it's amazing how disconnected it really is. And there was one who was all focusing around like entrepreneurship in small communities, and so I'm not going to put them on blast in public, but and like not that they'd actually listen, but just whatever. But
They will now.
yeah, it'll go around. But it was crazy how not relevant all of it was, because you had somebody who had been sitting in a high rise skyscraper in New York for 20 years making insanely high level business decisions that are disconnected by probably 20 rungs. And then, I'm trying to figure things out in the day-to-day minutia of it all, and it's not pertinent whatsoever.
Let's talk about the Midwest a bit more. Kansas City. Chris, we just talked about networking with other founders and entrepreneurs as well, but also Liam, feel free, anyone, to answer this question. Does it feel like you're fighting a battle to gain space in the Midwest, to gain respect, or are you seeing a big boon in that sector? Are you starting to see more companies come in or start up in these areas?
Yeah, I'll comment a little bit just on our go-to-market strategy. And it's not our strategy, but it's just commentary on our strategy. I think that Midwest often has an inferiority complex. Like we have a bit of a, we can't do it, or if we do it, it'll be inferior to something that's done elsewhere. And so sometimes we just, we don't say where we're from until they ask. And they're always surprised, and they're like, "Oh, you based in, Austin's the big one now." Like we say, we're in the Central Time Zone, and we're a tech company, so it's Chicago or Austin, right? It's like, no, we're based in Wichita, Kansas. And it was so funny. I was doing a demonstration for a company that's fairly local, and I will leave their name out of it. But we're doing this demonstration, and don't get me wrong, this was a great demonstration. They were eating it up. It was a great call, and we're starting to talk about projects and things like that. Like, so where are you guys based? And we're like, oh, Wichita. And it's like 45, it's like, within driving distance. I could be there by the time they left work. And they just kind of a little bit surprised. But then I go to local contractors that know me personally, and it's a little bit like, oh, you just built that in this building that I drive by every day. I'm very surprised that that's going to be a product of value. And so, because I trust the Silicon Valley, the New York guys. And it's just kind of this thing. It's like a catch-22 in a way of, you want to sell to your local community and you want to partner with your local community, but your local community is also is a little surprised when they see that you're so close. So I do think that is being ground down, but it is something that's, I've turned it into more of a game, and rather than being frustrated with it, in order to just keep promoting this idea that good tech can be built anywhere. And good tech is being built in Wichita, Kansas by Plot and by numerous other teams. And Kansas City is doing the same at a larger scale than us.
Well said. And Midwest inferiority complex is my new favorite phrase. That I love that. Liam, what are you seeing? Is Kansas and the Midwest? What's the potential here? Do you see it growing?
Yeah, absolutely. And I'll take kind of a different perspective. I think Chris's view is very valid from his perspective as a founder that's trying to stand out and sell to companies that are used to dealing with vendors and software providers on a whole range of kind of just stages and sophistication. And that's not easy. But as an investor, and the one with Kansas City in our name, we a lot of times will get inbound from other investors looking into the area. And overwhelmingly recently, it's been, what's going on in Kansas City? Like, I keep hearing about Kansas City, like something's happening in the area. And I think that's really exciting. But also, to Chris's point on the Midwest inferiority complex, there's also this kind of Midwest nice or Midwest humbleness, right? And I think until we're able to own that and be proud of that, it'll be hard to kind of get to that next level. But I think we're headed in that direction. And it's just a couple more successes, a couple more turns of the flywheel, like I mentioned earlier, and even more people start taking note. But I would say I think the folks that are diligent and focused and in the know are starting to see the opportunity here, are starting to see that there's certain organic strengths in the area that, whether it's Kansas City or Nebraska or Wichita, are really good at and leaning into. And as such, there's opportunity to differentiate. And so for that reason, I think we're still in the early days, but I think we're graduating from the early days and got several opportunities to really just make a name for ourselves in the coming years.
Well, fantastic. Again, really appreciate having you guys join us here for this episode. If each of you want to kind of do a quick plug on where people can find you and any other kind of plugs on what exciting things you might have coming up here in the near future.
Yeah, I can go first. So once again, our company's name is Plot. We're PLOT, and you can find us at getplot.com. Obviously, I'm on all LinkedIn. I love to connect. In a similar vein of our conversation today, I love to connect with other founders. So if you are listening, and if there's anything I can share with my experience that would prevent you from touching the stove where I did, I would love to share that with you, because that's what I'm looking for in all these conversations. And yeah, that'd be how you can get a hold of me.
Yeah, and I'm happy to connect with anyone who's interested in learning more about Kansas City startups. We don't just invest in seed stage. We also talk with folks that are at pre-seed or just even idea conception. So if you want to know more about what's being built in Kansas City and have an interest in investing or connecting with them, you can reach me on LinkedIn as well. Our website's kcrise.com. And our contact information is on there as well. And also happy as always to talk with any startups that meet our thesis and might be in geo. So reach out.
Chris, Liam, thank you both for coming on here and talking together. I think this is such a cool dichotomy of startup founder and startup founder supporter, seeing both ends of it. This has been really enlightening for me. I don't know what I expected coming into this, but it was awesome. I think we got to do some more of these. But Chris, Liam, best of luck to both of you in the upcoming future. We'll certainly look you guys up, shout you out, and I hope we can meet sometime in the future. I'm jealous of all the cool people Tanner gets to meet. But thank you again. And if you've been listening, thank you for staying. Thank you for listening to us. Please reach out to Chris, reach out to Liam. They'd probably be flattered that you listened to this and were inspired enough to ask them a question. Conversely, you can always reach out to Tanner and I, but please feel free to share our podcast with your friends, family. Someone's bound to get a nugget out of this.
All right, perfect. Well, we will see everybody next week. Bye-bye.